And good evening, everybody. This is Michael Filighera. I'm with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Tuesday, August 10th, 2021. Yesterday, as I left off, we had an open ticket for a surge higher or a surge lower. And the market initially started this morning off the opening as if it was going to just go up. Made a slight new high for this particular sequence, and then froze, and then turned and went down very strongly. So we didn't get the upside move that could have happened, that we had worked out our Fibonacci's for, but we did get the downside. And the downside was very steep, and it was very strong, and it lasted all of an hour and a half. And once that level was reached, we rallied, but not as strongly, which leads me to believe that while I moved out. This is wave one. We're in a wave two correction. It's an A, a B, and here's the C wave. Now, the C wave did exceed and put in a new low below A. Perfect. It wasn't quite a flat. So we may still get down to this resistance, this support at 14,985.86, or even a little bit lower to complete this wave. If, though, this level completed the double sub minute wave 2, then we're taking off in a third wave. What do we know about third waves? The characteristics of a third wave is that they're the strongest, that they're the longest, they're a powerhouse, they move, they don't look back, they go in the direction of the trend. Right now, still is up. And if that's the case, then this would be 1, 2, maybe we come down a little bit more, but we basically hang above 15,000. We do not drop to new lows. So if that is the case, and tomorrow's number, which is the CPI, is totally embraced by the market, loved by the market, relieved by the market, whatever the case may be, then we would get a very strong upside move, and that would fit a third wave. What are the capabilities of that third wave? Well, we can run Fibonacci's that would tell us, give us a better, clear idea of it. And forgive me for the mouse and my computer. They don't seem to want to get along. And first, let me take this down, because if that's complete, and we're not going to be looking for anything less, I'll remove that one. And now I'm going to measure for a third wave, and that would have a relationship with wave one. So we want to put our first marker there, second marker at that line, and then we're going to come down to what we would think is the bottom of the C wave. And what that then portends is that initially, wave 3 would be expected to at least be equal to in length to wave 1, and that's 15,315. If it's a wave 3 that's more typical, then it's going to be the longest and the strongest, then we might be looking for this level, which is 15,515 to 15,543. That would be the power of the wave that we could be looking at. Again, what can produce that? Inflation's under control. Inflation doesn't increase. Inflation maybe decreases. Whatever that number is, that's embraced by the Federal Reserve, and it's embraced by the market as okay. Okay can equal good. Okay can equal relief. All kinds of things. Many are saying that this rally was that initial kick of inflation, the threat of inflation. It's not good for tech stocks. And because tech stocks are very sensitive to interest rates, et cetera, higher inflation puts more pressure on the Fed to begin to raise those rates. So that's the negative picture. The positive picture being the market loves it. And yes, we could get this kind of a strong rally. We would at least likely get above 15,200. So I would say we at least get up to the 15,220 area, then to 250, then to 15,300. So at least wave 3 has to be equal to wave 1. Whether it does it in one shot doesn't make a bit of difference to me. The thrust is what I'm looking for. So here's what we got going on for tomorrow. That possibility, or the market decides that it is a bad number. Well, we have additional support below that level I just gave you. So let's remove that and let's put that original one back on, which was to measure the C wave. So this C wave, it just really cannot break 14,849. So easy to remember, 14,850. Really can't break below that. If it does, it's not a wave 2. It would be something else. And it could be as simple as trying to rewrite what we've done so far. And that this is wave B, would be way over here. And all of this C would be what we're doing now. And it could be, as ugly as it is, it definitely could be. So that's an alternate. And then we would be able to drop below 14,774 to complete the C wave down, and then stick a 4 underneath it. That's the alternate. Right now, balancing it against what expectations can be for the additional markets, the S&P in particular, kind of show the same thing, but the drop would not be as severe, because it would just be starting from its upper levels and it's going to complete a C wave in the S&P. And that video is already online, so you can always check that out. But speaking back about the NASDAQ, we're fiddling around right here, so that leaves open possibilities. We may fiddle around right there all night, up, down, a little here, a little bit there, as this just extends out in a possible wave 2 and a possible, many different views. And then we get that number tomorrow morning. And then we'll see what the market wants to do. Downside, we've got it covered. Initially, okay, it comes down to here, maybe down to here. If it breaks that, shifts it around, and then we can come all the way down to there or below. And if that's the case, one more time, I'm going to throw up some additional Fibonacci's that will go along with that. If I have to mark this, excuse me, that's wrong. I'm going to mark it from here, this high, to this low, oops, to this high. Now you begin to see this is a much larger move, and I wouldn't want to see it break here. So we've given ourselves an additional 100 points, basically. 14,644. But it certainly can come down further. It can come down there. It can come down to here. It can come down to here. It literally can actually come down and almost equal, but it just can't exceed it. I know it's ugly, but it's all a topping process. Now, I actually am not expecting this, but I have to present it because the market's reaction may force it. The market's reaction, if this number just really blows the doors off of inflation and puts the worry into people, then boom, I think we can get a magnification of what we did today on the opening. And that's just how they'll start bailing. And I don't think that buyers are going to step in because the buyers are turning into sellers. And if everybody's already short, they're just going to hold the short and let's ride it for as much as they can. So I think that would also cause just a steeper more intense decline. Again, based against a number that they don't like. We don't know what that number is going to be, so we need to be prepared for both views, both sides. So we are. We have our upside look, we have our downside look. Upside looks, we can definitely move. We can get above 15,300 on one move if they like it, or even higher. If they don't like it, if it's sort of trashy, but not really that nice, well, then we drop and hold it within this level, like down above 14,950, I would suspect. And to be honest with you, if this is wave one to wave two, can come all the way down to 14,850. But that's what it has to hold. If we're moving and shifting the larger picture around, then we have much more room. But still, I would want to, excuse me, that's the level. Yeah, 14,644. So both counts, we can apply, we can give it more room. We can take it down to do not break zones to keep each one alive. If it breaks all of that, just trade what's in front of you. We'll figure it out later. That's how I would leave that. Remember, folks, trade what's in front of you. Don't get caught up and not recognizing that it's not going in one direction, it's going in the other. That was the play today. It got caught up, or I got caught up in that, oh, gee, we're going higher. And so when it came down, I bought it. Well, then it zipped down real quick and I had to make a change very quickly. Fortunately, because of what I'm telling you, I have to apply the same thing, in which I did. And so then it was easy to make the money back because you just jumped on and it went. And then as the market opened up, you can see on a 15-minute basis, it didn't really, I mean, yes, it had the little rallies, but there were ample opportunities to reshort it, to reshort it, to reshort it. And this was the final one. Boy, that made your day. And then it was done, and then they just bought it. So tradable, yes. Keep your wits, stay focused. Allow your moving averages to tell you, don't get caught up in what your expectations might be for the market, because the market's not checking in with you first. They don't check in with me. I don't think they're going to check in with you. That's how I'm going to leave it. We're all prepared for tomorrow. Have a great trading day. And the next update will be Wednesday, August 11th.